Hello, this is Lloyd Edge from Oz Property Professionals. I would like to thank you very much for joining me on this webinar this evening, where I'd like to talk to you about some of my investing strategies and perhaps help you or give you some ideas about how you might be able to help yourself, or I might be able to help you along the way to achieve some of your goals along the way. Essentially, what I'm here to do is perhaps show you how we can create some lifestyle choices in our lives. I think a lot of people are sort of born and bred to go to school, get a good education, and then get a job, and then pay off a mortgage for 30 years so that we can retire and be comfortable. And that's certainly what they teach us in school. And they don't really give us real financial background. And I know that when I was at school, if I was taught what I know now, I might have been a little bit even further ahead at a younger age. So, and it took a little bit of a while to figure things out and use a few different strategies. But I think it's very, very important and also very possible to be able to take control of your own financial life and your own lifestyle goals so that you're not just living by society's rules the whole time. And essentially, I'd like to share with you some of my own investing experiences tonight, both good and bad, and the strategies that have helped me to get to where I am at the moment. What I'd like to do is just, I guess, introduce myself a little bit. And this is certainly not to boast about myself or anything like that. That's certainly not the idea of it. But I think it's important that you know a little bit about my own background and where I'm coming from, because let's face it, you're giving up some time to listen to someone talk about property investing, and that's a big ticket thing to be doing. You want to make sure that you're listening to someone who's got some experience and some runs on the board having done that, and also someone who wasn't just born with a silver spoon in his mouth or anything like that. I wasn't grown up with a lot of wealth or anything like that. So and I built my wealth through a period of time and through different strategies. So I'd just like to talk a little bit about where I've come from, basically, because initially I was a musician and a conductor and a music teacher, and for many years I was teaching on a moderate income, and while in those days I did enjoy teaching and everything, it certainly became apparent to me that I was not going to be able to have the money that I would need for retirement, let alone live the lifestyle that I wanted to create for myself and at that stage what I would be a future family. I just felt stuck, and I felt trapped along the way. That was about 15 years ago, and moving forward now, I've accumulated a property portfolio of about $10 million using a number of different strategies. Those strategies all include cash flow properties, high capital growth properties, subdivision, renovation, all buying under market value. Basically, I think you make your money when you buy, not when you sell. And certainly the key is never to pay too much for a property. So, but just going back to initially where I started, I just bought a one-bedroom unit, basically. I didn't really know what I was doing. I was a little bit lucky at the time. I knew that would eventually be a property that I could use as an investment. I did live in it for a while, but I did make sure that it had a few key drivers in place, and one was the fact that it was near a railway line, so near good transport. It actually had buses there as well. It was near the shops, and it was near the water, so I knew that was going to potentially be a good investment in the future, although I didn't know much about investing at the time. However, living in that for a few years, I then managed to get some financial advice and then use the equity from that to allow myself to leverage into some other properties, which again were more buy and hold properties, and the process was quite slow, particularly when that first property I bought was after the boom from the Sydney 2000 Olympic Games, and the property market had actually just started to go a little bit flat, which is basically meant that I didn't really get much growth for for a few years, and there was actually particularly one year in particular 2005 where the market went backwards in Sydney and everything like that. However, the properties that I did buy, because they're reasonably well located, did pretty well. But they were just slow getting growth. And during this period of time, I felt very trapped because I thought, well, I've got a bit of debt here. I'm getting some properties, got some debt. They're negatively geared. What am I going to do? There must be a better way to create wealth through property than what I'm doing at the moment. Because I'd read stories about people who've done very well through property. I would attend seminars and hear about all the things that people are doing, but I didn't seem to be having that sort of success. So I thought, okay, I need to look at how I can make money straight away on a property. And that's when I started looking at making instant equity through different types of strategies. Now that included buying stuff under market value, buying stuff off market, buying stuff that might be deceased estates, doing properties that needed a bit of a renovation, doing splitter blocks, doing subdivisions, duplexes, all sorts of things like that. And that's really what got me going with my portfolio. I'm going to talk a little bit more about all those strategies a little bit later on. What I would just like to continue doing now is just talk a little bit more about where I am now and what my property portfolio has allowed me to do, because it did allow me to be able to quit my job as a teacher. And it was quite funny because I would spend a lot of time in staff rooms at school, and all the teachers would be talking about buying lottery tickets and hoping that they could, win the lottery and become rich and get out of there and go to the Bahamas or something like that. And I was actually, I've never actually bought a lottery ticket at all in my life, but I was planning a way to actually be able to move forward so that I wasn't relying on the income, the super that I'd create, the super that was really not very much at all. And also not only that, but the fact of living via society's rules, getting up at 5:30 in the morning and having to sit in the rat race and you sit in that traffic and everything like that. So moving forward to where I am now, it's given me the freedom to do a lot of things that you can't do with a 9-to-5 job. I mean, we can go on holidays, we can spend time with our family and friends, we can basically choose how we want to spend each day. And it's it's a great way to be living life, because at the time when I was working full time, I just felt trapped and in a bit of a rut, and that certainly wasn't very appealing to me at the time. So that it's really given me quite a lifestyle change and everything like that. But the key to it is having the right strategies in place. And now I'd like to talk a little bit about some of those strategies. So in times gone past, we've basically learned, our parents and our grandparents, it was all about buying and holding for the long term and having negatively geared properties. Now, negatively geared properties are a little bit out of date. To me, they never really make much sense. The fact that you've got to buy a property, lose money on it, just so that you can then get a little bit of money back on tax. And there is a place for that, particularly if you're on a very, very high income and you do need to try to cut back on your tax and everything. There's a bit of a place for that. But generally, for most people, and certainly for where I was, having negatively geared properties is not really, and was not really, the way to go, particularly when there's no guarantee of capital growth. We've seen that back in the 70s and the 80s, where properties tripled, and in the 90s they did very well also. But coming forward to today, we're basically seeing still a lot of growth that's been happening in Sydney and in Melbourne, but in other markets there hasn't been much growth happening at all. And in some cases they've been going back, and we've seen what's happened in Western Australia. It's so reliant on the resources sector that that the property prices have actually been going backwards there. And while there might be some people saying that's a great time to get into the market there, I don't necessarily advocate that theory, because I don't think the long-term growth and sustainability of that market is quite as high as what we've got over on the East Coast. Uh, but but in terms of talking about growth, I do think that we need to look at more sophisticated strategies than that. And that's when I really started to look at how I can make money going into the deal, going into the deal. And it was really when I first built a duplex and made an enormous equity gain on it that my life really changed for me. Because basically, I built a duplex, I had it strata titled, and then the instant equity gain I got out of it was $141,000. And that was basically a 4-month build plus the 2 months for DA getting it through council and a few other weeks here and there. But basically, seven or 8 month time frame from finding the land to completion, getting that equity out of it. That was double what I was earning as a teacher at the time. And then I thought, well, I'm onto something here, but also I thought, why am I getting up and going to work every day when I could be doing this? Particularly now, I should say that if you're exceptionally passionate about what you're doing and you love getting up and going to work every day, then that's fine. So we're not really about criticizing anything like that. But I do speak to a lot of people who are not necessarily happy where they are, and they certainly want to try to be creating better lifestyles and financial outcomes for themselves. And it's not always about just quitting your job, because financial choices and financial freedom means different things to different people. So it could mean retirement for some people, it could mean working part time, or it could just mean uh, one partner stays at home, looks after the kids while the other partner can work, or it means you can afford to put your kids through private schools, or you can afford to go on those family holidays without worrying about where the money's going to come from. Those are all different levels of financial freedom, which are very important. And that's so it does mean something different to everybody. But certainly for me, I got really passionate about this idea of being able to create this kind of equity straight away. And not only that, but it also had really good cash flow at about a 7% yield. Now, generally, if you buy a property, say in Sydney, you'd be struggling to get anything more than about 4.5% yield. And in any other market, even a strong market that's got good yields, such as Newcastle or Brisbane, you're really only going to be getting about 5.5% rental yields. But having a dual income coming in with the duplex, then the rental yield's already much higher. And of course, uh, you're mitigating some risk there, because you've got two lots of rent coming in, and if there is any chance that one will be vacant, the other one is probably going to be rented, because they're not going to necessarily be ever vacant at the same time. And of course, it comes down to how to choose the location and everything, which is what I'll go into a little bit later on as well. But basically, once I got that equity out of the deal, out of that property, I could then repeat the process, go and build another duplex, and get more equity out of it, and get my way towards financial freedom. And not only that, but buy other types of properties, because I don't believe that you should only be buying one type of property, because you should be diversifying. So I'll give you an example of what I did with my very first duplex, is that I actually took the equity out of it, and I actually then went and bought a blue chip property in the middle of Brisbane. So I put down a deposit on a property there, and then also used the equity to build another duplex as well. So essentially, that that equity from the original duplex allowed me to fund another duplex and a blue chip property, which was in a high growth area, which so yeah, that did really, really well for myself. And then moving forward, sometimes we're not always going to be doing big deals such as duplexes. There are other strategies to be using, such as the renovation strategy, or just simply buying stuff under market value and then getting them revalued higher, and buying stuff under market value, particularly if you can get them off market. It's all about creating equity when you buy, making sure you're not paying too much for the property. But what's really, really important is knowing where you want to finish. So the way I tend to do things is not just buy properties at random and think, okay, this will work or that'll work, or I'll get some equity out of this one. But I like to look at where I want to be financially in a period of time, say 10 or 15 years down the track. What are my goals? Do I want to be retired? And when I say where do I want to be, this is I was talking about my goals from a few years ago, but I want you to all ask yourself, where do you want to be in 10 or 15 years from now? What does financial freedom mean to you? Where do you want to be? If you've got young kids, you need to put them into the equation. You might want to put them through school. You might want to go on those family holidays. You want to have time to spend with the kids because that's really important as well. But look at where you want to be in 15 years' time and then work backwards from there so that we can then design a property portfolio around that. If you just decide that you just want to buy a few properties at random, then that's probably not going to be the right thing to get you to where your goals are, because we need to have a mixture of properties in there. Some of those properties need to be cash flow, some of those need to be instant equity, some of those need to be good high growth properties. And generally, you can't have high capital growth and high rental yield properties, high cash flow properties at the same time. It's one or the other. The one decent thing about duplexes, and I tend to call it a trifecta, is you actually get all three. You get you can get the long-term growth, you can get the cash flow from the dual income, and you also get the instant equity. We need to really look at the financial structures as well, because statistics show that 90% of Australian property investors never get past only one investment property. Now, there's a few reasons for that, but the main ones are having the wrong financial structures in place, buying the wrong properties, or simply being too scared to move on and buy other properties because they're a bit risk adverse. But we can mitigate all those risks, and I'll talk about that in a minute. But one of the things about having the right financial structures in place is making sure that we're not cross-securitizing all our loans with the same banks, that we diversify amongst different banks, and also choosing properties that are in different locations and meet different needs. So high cash flow properties might be in areas where the longer term capital growth isn't quite as good, but it'll give you that cash flow injection into your portfolio that you really need so the banks can keep saying yes, so that you can keep moving forward. Quite often, you'll find that if you are just buying properties in a capital city, you get one, two, or three properties, and the banks will say, no, you're maxed out. But the way to overcome that, and if you're ever wondering why you hear about people who own 10, 20, 30 properties or more, it's because of the strategy to be able to buy them in different areas and have some good cash flow coming into them as well. So if you buy a property in a regional type area, it'll have that cash flow coming in because generally the rents will be higher, and then the banks will be happy to lend you a little bit more money. When I'm talking about regional areas, I'm still talking about major centres, so I don't go in the middle of nowhere and invest. I certainly like to stick to major centres that have all the pillars of economic growth. So we still need to be buying, and whether we're building duplexes or whether we're building or buying other types of properties, as I said, I've got lots of different types of properties in my portfolio. Whatever we're planning to do, we've got to make sure that we're buying where there's good transport, where there's good education, so universities and schools, new hospitals or hospital upgrades are really important, good infrastructure, rising population, jobs growth, and they can happen in regional areas such as Newcastle, Armidale, and of course, if we can be buying in the capital cities, that's great as well. But it really depends on your financial perimeter. And the other thing with the changes that the Australian Prudential Regulation Authority, APRA, has made in recent years is that the lending criteria is a little bit more difficult these days. So you do need to have a savvy broker who can choose the right lender and and choose the right loan for your circumstances, and we need to buy the right property for what you're looking for, basically. Okay, so I think what I'd just like to quickly talk about now is if you wanted to go and build a duplex, for example, um, just a few of the things that you need to look out for when you're doing that. And by all means, I would welcome some questions or for you to contact me on my website. And you can see up on screen the phone numbers 1-800-146-837 and the email address and website are up there as well. However, the purpose of this webinar is just to give you a little bit of information here. So I'll keep talking here for a while, and hopefully you're not all asleep at the moment. So just getting on to if you want to if you're interested in making a big chunk of equity to help you get on your way to some goals. Firstly, I must say, with building a duplex, it's not just for people who have got multiple properties. It can be for people. I mean, I've got clients who haven't got any properties, and they might do a duplex as their first one because they can build some equity right away, and that can really help launch them into then getting another property. Because essentially, when you build a duplex and then it becomes strata titled into two separate titles, you've essentially built one property and it becomes two properties. But then once you take that equity out and you buy another property, that's a third property really. So you essentially, out of one deposit for the property, you've actually made you bought three properties potentially within 6 or 8 month period, which is what makes these such a fantastic investment that can fit into any part of your portfolio. So in terms of finding a duplex, I've got a very strict due diligence process that I follow, but certainly the important thing is the strategy. Is the duplex right for you? So don't just go and buy a duplex just because you think you like the idea of a duplex. Really have a chat to a mentor or your financial advisor and decide whether the duplex strategy is right for you. Work out your financial perimeters, how much you can borrow. For example, if you can borrow $600,000, there are certainly many areas you can do a duplex. You can even do a duplex for $500,000, including the land costs and everything. But you won't get that in Sydney, of course. You'll be paying well in excess of $1 million in Sydney. So you need to look at those financial perimeters first before you move forward, so you know where you can look at, what areas you can look at. And then, of course, we need to look at the best location possible for your financial perimeters. So if your total maximum is 600,000, then we need to look at areas where that are best for that location, best for that financial perimeters. And as I said, having all the pillars of economic growth in play are really important because they really need to be well located. And I've explained what all those pillars of economic growth were a little bit earlier, so I won't repeat them again right now. But another sneaky trick I think is important is sort of follow where Bunnings and McDonald's are popping up, because if they've just popped up some new stores, then they've obviously done their research, and therefore it's probably a pretty safe bet that they're expecting some strong growth in that area, and getting access to areas such as RP Data, CoreLogic, and BIS Shrapnel to get some further information on some areas and things is important as well. But you can find a lot of that stuff just on the internet, on realestate.com and stuff as well, which is all very very important. Once we've chosen our location, of course, we need to get around to finding suitable land to build the duplex on, and quite a lot of the time the land's not necessarily going to be the land that you just see on the internet. So get on the phone and call some agents and see what they might have that isn't on the market yet. So off market stuff, they might have some relationships with developers and they haven't listed anything yet, but if you make some phone calls, you might be able to get some really good deals there that aren't necessarily available if you just search on realestate.com or domain like everyone else does. And it's also important when you're building a duplex to try to build it in an area that is surrounded by owner-occupied properties. I would probably suggest 75 to 80% owner-occupied, because if you build in an area full of investors, that's actually going to inhibit growth. So it's actually owner-occupiers who drive growth, because they actually they're the emotional buyers, and of course, if you've got emotional buyers who are paying more for their properties, they're going to pay more for your for your duplex as well. That's going to help push the growth and everything like that as well. But of course, before you even get around to buying the land, you need to make sure that you can actually build a duplex on it, because you can't just do that in any block of land. So you need to make sure you check council websites, check the zoning, probably place a call to council as well, and make sure that they will allow a duplex there, and also make sure that the DCP in the area allows for strata titling, and there's no covenants on the block. So again, it takes a little bit of due diligence, but just a few phone calls and everything there. But I do know people who have bought a block of land and they can't do anything with it, because they bought a block of land and then tried to build something on it afterwards, and of course they couldn't get a DA approval through. So you need to do all this research before you go ahead and do anything. So that's really important as well. But once, and of course, there's a few other things. You don't want to be buying in a flood zone or anything like that. New estates and things like that these days, the councils don't release them in flood zones, so you're fairly safe there. They're usually elevated, but just need to check on things like that. And it's also pretty important to probably get a contour survey of the land before you settle on the land, and maybe take that to a builder or an architect and start to get some drawings in place there, so that you know that you can do what you want on that land. You need to make sure that you get the setbacks required by council and everything are okay, and that you can fit, if you want to build a 6-bed duplex, 3 beds on each side, for example, that you can actually fit that on that block, and that council doesn't come back and say you can only fit a 2-bedder on there or something, because then that's going to decrease your equity and cash flow. So a lot of work to be done up front, of course, and everything like that. But once we've done all that, and you've got some drawings done there, then you can get around to putting in the DA and everything like that. And basically that can take 2 or 3 months getting the DA through, and that just really depends on the council time frame. And there's councils can be a little bit frustrating and everything like that, but it's all worth it in the end. But one of the things I would like to mention now is not so much that, but it's about some of the things that you can do when engaging a builder to protect yourself. And one of those things is making sure that you've got a fixed price contract. A fixed price contract, so that you're basically signing for a particular price, and you know that there's no hidden fees or charges or nasty surprises at the end. Now, in a standard HIA contract, as Housing Industry Association contract, there will be a few exceptions to fixed price, such as hitting rock under the ground, because a builder's not going to cover that themselves, because nobody knows there's rock under the ground until they actually start excavating the site. So the only way to mitigate against that is to try to build in an area where there generally hasn't been any rock found. That's the best way to mitigate that. And in all the duplexes I've ever built for myself or my clients, we've only ever struck rock once, I think, and that was actually in an area where none of the other blocks in the area had struck rock, but this particular duplex unfortunately did happen to strike rock, unfortunately. But generally, that's the best way to mitigate that. But other than that, there should be no other nasty surprises where the builder has to start charging you extras at the end, because they can get a little bit nasty for you. And of course, having a time frame that you can fix the build, that you can finish the build. Given the fact that a duplex should only take about 4 months to finish, you should put about a maximum of about 26-week time frame in the build. And then if they go over that time frame, they should be able to pay you liquidated damages. So you should have something in that contract, and I'd suggest putting something like $100 a day liquidated damages. That covers you, because builders generally will put naught in there, or $1 a day or something. So you need to watch for these little things, because they can be quite sneaky. So you need to make sure that you look after yourself there when you're doing things like that, just so that you're covered. So, because things can happen, they might go over time, but that's not such a bad thing if they're going to pay you the liquidated damages for going over time, basically. So yeah, that's in essence is putting the build contract together, and of course the building part of it is a lot of fun, and seeing the slab go down and all the frames go up and the roof go on and everything like that. You get pictures, photos at each of these stages, and go and visit the site and everything like that. That's a lot of fun. And of course, at the end, it's a lot of fun getting the property onto separate titles, and getting some tenants into the property, so that actually you're paying rent, and then you can sort of move on and either repeat the process, or depending on your strategy, go and do something else. Again, something where you're creating value in the deal. It could be a different type of property, but I won't go into every type of property in this webinar. I just wanted to discuss this duplex strategy today. But yeah, so that in a nutshell is what the strategy is about. There's a lot more information about it on the website, and you would have seen a few photos and things go up during this webinar as well, with some of our completed projects that we've done. If you would like to have a chat to me about property strategy or duplex strategy, I'd very much welcome you to contact me, and you can email me directly on lloyd@ozpropertyprofessionals.com.au. You can give me a call on the 1-800 number. It's 1-800-146-837, and we can have a chat. And essentially, it won't necessarily be a chat just about your duplexes or anything like about that, but it'll be a chat about where you want to actually be with property, and how we might be able to help you get there. And maybe I can give you some advice, and look at building a strategy around where you want to be, and how you might be able to get there. Because I've mentioned a few times briefly in this webinar about the different strategies that can be used, such as renovation, buying deceased estates, buying mortgage sales where the banks have foreclosed and things like that, and doing splitter blocks, all these things that can create value. So I've talked about these a few times. They all go in as part of your portfolio. And in all my properties, I've got all types of properties, certainly not just duplexes. They just form part of the portfolio. But the reason why I have talked a fair bit about duplexes today is because that was what really got me going when I felt trapped in my full-time job, and wanted to see a way forward, and that's really what got me going. But I certainly have got a lot of other properties as well that go into my portfolio. So and yeah, no, I'd welcome you to have a chat. The having a strategy session with me is completely free with no obligation. But what I would just like to sort of say to you here is that my business was basically started because of my experience and my history of what I've actually done. So I've been there, I've worked full time, and I've achieved financial independence, and I've now got my property business as a result. Because some people will ask me, well, why do you still work or anything like that? But if you're doing something that you love, then you don't work a day in your life. So for me, what I do now is not work, but clearly you need to do something that you like and that keeps you busy, because you can't just retire, otherwise you go crazy. So what I do now is something I'm very passionate about and what I love, and that's what my business is about. And it's really about showing people how it is possible based on my own experience. Like, everyone talks about retirement and and the grass is greener on the other side. And then people talk about how you can become a millionaire doing this or this or this and whatever. And I'm just here to share with you real strategies based on what I've done and what I'm still doing, and how they've actually worked for me. And because they work for me, I can, and they're working for some of my, well, many of my current clients. I mean, they're all working towards financial independence at the moment, and I'd like to be able to um, see how we can help you go from where you are. You might be feeling a little bit trapped in your current circumstances, and see if we can allow you to become free. And you might be feeling a bit insecure, a bit fearing a few things, but we can try to give you some control over your life and become happy, and feel like you're really commanding everything in your life. So that's what I would like to be able to help you with a bit, and certainly just ring up or send me an email and have a chat, and then if there's some way we can help you with obtaining some actual properties and things like that, and doing some potential, whether it's a duplex build, whether it's acquiring some sort of other property, then we can certainly do that. But initially, just have a chat, and we'll find out what situation you're in at the moment, where you are. Uh, where we don't just do duplex builds, but we're buyers agents as well. So depending on your financial perimeters and the strategy, we can just go and buy you properties based on that. So it's certainly not just duplexes. As I said, duplexes was something that I specialize in, but it's something that really got me going to achieve the financial independence that I've now achieved, and that's why I'm sharing that with you this evening. But there's so many strategies with property, and it's just a fun journey uh, to be involved with, and I'd very welcome any of you to contact me, and we can have a chat. So thank you very much for tuning in today, and I hope to hear from you soon.